Hello, this is PJ Denuzzo with Denuzzo Wealth Management on another episode of Denuzzo Insights. And today's topic is titled Portfolio Rebalancing. Portfolio rebalancing falls under one of the major tenets of control what we can control. It's what we've referred to over the decades as one of the few free lunches that are available in the capital markets to be able to maintain your portfolio by forcing yourself to perform the two best trades possible, selling high and buying low. So let's control what we can control. Today, currently we're in the midst of the COVID-19, the coronavirus challenge in the capital markets, and there are significant buying opportunities that are available across the various asset classes, large stocks, small stocks, international stocks, et cetera, that I'd like to share with you today. As I stated previously, and I would like to reiterate that currently this is one of the 6 best buying opportunities of my lifetime. The 6 best buying opportunities of my lifetime would have been the oil embargo recession of 1973 and 1974. If you remember the runaway inflation and recession that we had in the early 1980s, 1982, the flash crash, October of 1987, the dot-com crisis, tech wreck, the technology wreck in 2001, and especially in late 2002. Of course, the Great Recession, the financial credit market meltdown in 08 and 09. And then finally, currently what we're in today in 2020, the coronavirus challenge that currently faces us. So again, easily one of the 6 best buying opportunities of my lifetime. Again, going by our basic fundamental playbook of forcing ourselves to sell high and buy low. And what I'm referring to there is we have what we refer to as a tolerance band, B-A-N-D. So there's a band around each of our clients' positions in their portfolio. What we've used for eons has been a 20% band. So for example, if you have a 10% target position in US large value, if it grew by more than 20% or shrunk by more than 20, so if it grew over 12% or shrunk below 8%, that's going to give us a trigger in our daily audit and tell us there's an opportunity in that portfolio to rebalance that position and force us to sell high or force us to buy low rather. Right now, of course, we're in the buy low category with the stock market being suppressed because of the coronavirus challenge that we're going through. So we want to utilize this opportunity to our advantage in the current market environment that we're in. Of course, one of the other benefits of having these disciplines and having the tolerance bands in the background, as far as what we're watching over on a daily basis, is that it helps us to manage our emotions and to keep us focused on doing the right thing, making the right trade. Because emotionally, if we were to revert back to a bull market, if we think back when we're in a bull market, we're in a growing market environment, if we're over 20% in a position, if it's grown by more than 20, the common human gut reaction would be to, well, let's continue to ride this as it continues to go up. Of course, everything goes up through the cycle, spring, summer, fall, and then back into winter. So again, we want to harvest those gains whenever we're able to, instead of leaving those on the table. And in an extended bull market, we may be harvesting gains in that portfolio a couple of times on the upward run. So again, we want to protect ourselves from ourselves. Again, we have the 20% tolerance bands on each position that are keeping us locked in from what we want from our max versus our minimum in the portfolio. And again, this allows us to stay on plan. This is the investment plan contained within our Denuzzo Financial Wellness Life Plan. First and foremost, the most important thing is always our financial wellness life plan. But what is the energy or fuel for that plan? That is our investment. So the plan's number 1 and our investments are 1A or number 2, however you like to take a look at it. So for example, if we have one of your strategies in a 60-40 strategy, 60% in stocks and 40% in bonds, we want to maintain that strategy and the integrity of that so that the long-term performance and risk-adjusted performance is in line with what our expectations are by doing this gardening or housekeeping, so to speak, whenever these rebalancing opportunities come up. So again, we want to maintain that risk reward profile that we have, and also the full and proper diversification in our portfolio. Again, to reiterate, this serves as an emotional ballast, as an anchor to assist us in wide market emotions during the upward bull markets or downward bear market scenarios. So we want to protect ourselves, again, from ourselves. Even historically, with us watching over portfolios on a daily basis, our annual rebalancing trades equal about 1 to 4 per year. So between 1 to 4 trades per year to maintain the integrity of our portfolios and harvest these opportunities when they present themselves of selling high and of buying low. Again, I would like to thank you very much for listening into our Denuso Insight today, titled Portfolio Rebalancing. Thank you very much.